Hello, I'm Simran, a finance geek and a self proclaimed foodie, and welcome back to my YouTube channel. Dutch Bros is a high growth operator and franchisor of drive through shops that focus on serving high quality handcrafted beverages with unparalleled speed and service. While espresso based beverages are still at the core of what they do, they also offer a wide variety of unique, customizable hot and cold beverages that delight a broad variety of customers. Recently, their boba and protein drink have gotten so much traction. I prepared a discounted cash flow model to value the stock and understand the company, and basis that I got a value of negative $8 per share, whereas it's currently trading at $35 a share. Now, I've been in the private equity space for over 6 years, and I know that DCFs aren't the best method to value high growth companies. Although Dutch Bros have been around since 1970s, they're growing at a rate of 25 to 30% in terms of revenue, and they're doing this not only by entering new markets but also gaining market share in the already existing markets. Let's look at some of their numbers. They had 370 stores in 2019, 441 in 2020, 538 in 2021, 671 in 2022, and 831 in 2023. They've already added 45 more stores just in Q1 of 2024, and their total stores are up to 876 stores. Not only did they open new stores, but they also saw same store sales grow from 2% in 2022 to 8.4% in 2021. I don't want to rely too much on this number because in 2020 and 2021, it was during COVID, and maybe a lot of people really appreciated drive through coffee shops in 2021, which is why they saw such a high growth. And you can see this from their 10Ks, which is their annual SEC filings, which you can just go to the SEC website and get, or from the investor sections as well. That their 2022 same store sales fell to 1%, but since then it has increased to 2.4% in 2023. In Q1 of 2024, the company has seen same store sales growth of 10% compared to the 3 months ended March 31st, 2023, where the same store sales growth was negative 2%, which is definitely something significant, especially when Starbucks has seen same store sales growth fall in Q1 of 2024. So, is that because of inflation or because of their poor service? And Dutch Bros isn't even in the bigger cities like New York, LA, Miami yet. So we'll consider 2021 to be an anomaly because of the post-COVID impact and consider growth from 2022 to now, which I know isn't a long enough period to consider for a business, but given that its values and missions are so similar to that of Starbucks, I definitely want to give this company a fair shot. Their Dutch Rewards program has been significant for the company. It was established in February of 2021. For the 3 months ended December 31st, 2022, the company recognized a revenue of $7.4 million, including $4.9 million for points collected from purchases prior to January 1st, 2022 that expired on December 31st, 2022. Their member registrations also increased from 2004 in 2022 to 2252 in 2023. Their labor and raw material costs did increase given the inflation, and so they increased the price of their products, but that didn't lead to a decline in sales at all. This means their product is truly something that the consumer wants and is ready to pay the price for it. I heard the earnings call this quarter, and the management team is phenomenal. When we look at private companies in private equity and venture capital, we use a scorecard method where we consider the impact of the management team, the strength of the product and the service, the use of technology in their products, and various other factors as well. But in terms of these three, Dutch Bros has got it right. Their management team is not only strong, but they also have the ability to communicate their vision with all their employees, be it on the corporate side or the ones who are serving you coffee at the drive-throughs, which I think is extremely important that all the employees at Dutch Bros are on the same page and are doing everything in their power and ability to grow the company. The company is also using technology to improve customer service. And I don't know if Dutch Bros will do this, but if any of you coffee shop owners are watching this, please try to do something like this. I think it's really cool and will set you up as a market leader. But imagine you're in 2030 and you're driving up to a coffee shop and there's a robot who's taking your order. You don't have to worry if you have to place the order in English, Hindi, Spanish, German, Latin. or any other language. And given that the US has such a large population of immigrants, this is definitely something all coffee shops and drive-throughs should be investing in. Because honestly, when you're an immigrant and you don't know English well, and you're driving up to give your order somewhere, you do go through a lot of fear, anxiety, and stress of wondering, oh, will this server even understand my language and give me the right order that I want? So even if companies don't have robots, they can definitely do something where they can improve the experience for immigrants as well. So, anyways, I don't know if Dutch Bros has those deep pockets right now to invest so heavily into deep tech, but they are definitely investing into technology, which is way ahead of their competitors. The strength of their product and service is also currently amazing. They have the power of pricing because they did recently increase their prices and it didn't lead to a decline in sales. So I feel the threat of competition to them is quite low. Now let's deep dive into the DCF that I conducted. I got all these numbers from the 10K and you can get them from the website or the SEC website as well. But here are a couple of assumptions I made. The investment period is 5 years. The revenue and EBITDA are growing at the same rate, reducing by 2% a year. Their capex requirements are increasing for the next 5 years as they enter new markets. 20% of their capex is depreciation and amortization. There's a 40% tax rate and 5% long term growth rate. I'll be linking the Excel sheet below in the description as well, and you can download it and play around with the numbers, increase your investment horizon, change your EBITDA and growth revenue rates, change their DNA, their capex requirements, things like that, and you'll probably get a positive number as well. But I've done this analysis on a very conservative side, and I got a valuation of negative $8. But now, being in private equity, I know that for such high growth companies, we can't only rely on DCFs. So I conducted a market approach as well. And Dutch Bros is a lot smaller compared to the competitors that I've listed out here. One, that means that there's a lot of scope for growth for this company. And I didn't apply any discount for size, and I got a price of $90 per share. And if I were to even discount it for size by even 50%, I'd get a stock price of $45 a share, which I think is very reasonable for the company at the current rate at which it's growing and the initiatives that the management is rolling out to ensure that their customer service is actually at the top. So, in terms of the company background, I think everything is solid in terms of numbers, their revenue, EBITDA, both of them are growing. Same store sales are growing and they are able to capture market share. So, I'm definitely betting on them. Now, before you decide to bet on them, make sure you look at the relative strength indicator or the RSI. You can head over to tradingview.com to look at this. So after they announced their Q1 results in May, their RSI has gone up to 70. And usually I tell you to buy stocks when they're in the range of 40 to 50. But I've seen Dutch Bros RSI be in the range of 30 to 40. So I'll tell you to wait till it's back in that range and buy the stock then. This is not a stock you should be trading, but a stock you should be investing for the long term. If you found this video helpful, make sure you subscribe to my channel and tell me in the comments if I should conduct this analysis for any other company that you're considering.